Ah, don't you love that green? I'm going to call it the Yellen rally. She begins her confirmation hearing in about a half hour. She's going to say, print money, stimulate big time. David Nicholas is with us. David, you think that this stock market rally is a bubble and that this mountain of money that's coming at Wall Street will burst that bubble. Is that right? Is that your way of thinking right now?
Well, Stuart, I mean, the bulls are clearly in charge of this market, no question. But, with all of the federal and monetary support that we've seen, the Feds have continued to say they're going to be accommodative. But it's that very medicine, the federal stimulus monetary policy, that could end up popping this bottle. And I think they're going to have a very difficult time unwinding this. So case in point, if you just see what happened, if we saw what happened with 10-year yields, 7 days of the year, the first 7 days of the year, yields rose 20 basis points. That move is unprecedented. So the argument has been for so long, well, there's no alternative, there's no alternative. But if rates continue to rise, if we see another 20 to 30 basis points rise in rates, that could be a very difficult narrative for stocks. So I think this idea that there's no alternative will start to shift. And I think that could spell trouble for this run that we've seen for the market.
Well, can you tell us when the bubble might burst and what you're doing today? I mean, would you sell today?
Absolutely. So we got to watch interest rates. So if interest rates, if the 10-year can stay around 1 to 110, I think it's going to be very accommodative for stocks. We get into the 130s, the 140s for the 10-year Treasury, I think all bets are off at that point. I think we'll start to see some asset shifting, some selling in asset classes from equities over to bonds when rates get into that mid-140s to 150s for the 10-year.
Why should this mountain of money and all the printing that the Fed's going to do, why should that raise interest rates?
Inflation, okay? Because remember, 25% of GDP will be infused into the market this year. That's unprecedented. You can't do that, Stuart, without getting inflation. So this is where, as we continue to print, we continue to have deficit spending, that leads to inflation. Rates have to follow. The Fed chairman came out right at the beginning of the year to try to stem rates rising. So I think they're concerned about this. So that's why I'm watching rates. As rates rise, as we start to see inflation, it could spell trouble for equities.
Would I be right in saying, though, that this is a Yellen rally today?
Stuart, you're spot on. This is absolutely a Yellen rally. She continued to say she's going to be accommodative. She wants fiscal and monetary stimulus. So that's bullish for markets.
Okay, but there's a bubble bursting or coming. Watch interest rates. All right, David, thanks for joining us this morning. Big rally day. We're glad you're a part of it.